Hello, hello. Good afternoon, traders. Hope you guys are all doing great today. My name is Jason Krutzky. It is a pleasure to be with you. As always, the time has arrived. Well, we're not there yet, but we are not too far off from the FOMC announcement. Today's show, we're going to be hanging out, talking shop. There's a few of you guys here. Thank you all for tuning in. We're going to be talking shop. We're going to be watching the market's reaction to the FOMC announcement. And we're going to be watching Powell's press conference. So we got it all going on here today. Hopefully you all are doing well. It has been a bit of a frustrating day out there for both sides of the market, whether you're long or short. Market is not. Everybody's just chilling and waiting for this announcement. And from what I've gathered, at least this afternoon, from talking to some traders and listening to some commentaries, sounds like most people are expecting a bit of a nothing burger today. The general consensus from what I'm gathering, and I'm curious to know what you guys are hearing as well, but the general consensus from what I'm gathering is that this thing's going to be a nothing burger. Maybe we'll get a little bit of volatility, but we've been gaining for quite a few weeks now. Maybe it's time to pump the brakes. I don't know. I don't know if I have an opinion here. What are you guys thinking? There's a handful of you guys here. Say hello. And let me know where you're tuning in from. Let me know what you're thinking about this FOMC announcement. Do you have any expectations? If you do, what are they? Are you currently in any trades? If you're in trades, what trades are you in? Are you going to be holding them through the announcement? Are you going to be sitting on your hands for the announcement? One of the hardest things that I've found to do in my time as a trader. What's up, I Am Game? How's it going? Hope you're well. One of the hardest things I have found to do. You say nothing burger too. Interesting. Okay, cool. One of the hardest things I've found to do is not get involved. It's not get involved on a day like today. So I'm going to do everything I can to keep my hands off the buy or the sell button and just let the market do its thing today. And maybe I'll come back to it tomorrow. Holding MSTR for $1,000. What are we trading at? 500 right now? 560? Let's see. Interesting. $1,000, huh? What's your time target on that? When do you think it's coming? Are they up and over these? Yeah, interesting. What's up, Larry Hall? How are you? You say $1,000 by March? Game? Dang, sir. All right. I wish you luck. I hope that happens for you. Looks like January, pretty good performing month. 72% win rate in January, second strongest month of the year. And you've got a weak month this year. So that could fare well for you. Let's look back not so far. Let's go to 2013. So this is looking back 10 years. December, clearly a pretty lousy month. And then gets a little bit better. January, February. BTC to 70K by March. Wow. Man, I'd love to see it. I hope it happens. See if anything's going on in Insider World here. Who's this guy? Janine Montgomery, Senior Vice President, sold 8,000 shares for 4.2 mil. It's the most recent insider transaction there. I don't know. Is that notable? Maybe. Maybe not. Looks like she hasn't received any shares this year. So whenever those came from, She's been holding them for a moment. Oh, no, hold on. Here we go. So she was awarded, excuse me. She was awarded 457 shares in June. But she sold 8,000. Interesting. Actually, that is kind of interesting. I wonder how often she gets awarded shares like this. I only have the last year of data. What do the markets have priced in? I'm not certain, Larry. We could take a quick look. Let's look at 0 DTEs. Oops. I'm utilizing the assistant here. The assistant is a really helpful little tool because it'll help you navigate the platform if you don't know where something is. It's just a quick and easy way to get to things. So I'm pulling up the QQQ unusual options, and then here I'm going to filter zero days. Let's see what's coming up on the, oops. It's coming up on the 0 days here. On the Qs. See if there's anything interesting. Drop pretty small premiums. I'm looking for like some conviction. So the biggest unusual options trade, 0 DTE, on the Qs, 400 calls, $370,000 premium, 24% of the open interest. This was a bearish sweep at the bid. Now, just so you guys are aware, these are tagged bearish. If they're purchased at the bid, they're tagged bullish. If they're purchased at the ask for calls. You're not in any trades, Larry. You're waiting to see a clear direction. I'm anxious. I wonder if we're going to get that clear direction today. Some folks I've been talking to kind of suggesting they think that the markets are just going to, we're going to get a big move up, we're going to get a big move down, and ultimately going to close near where we opened. Or within a relatively tight range of where we opened. I think that seems like an interesting and potentially the most frustrating, well, definitely the most frustrating, but potentially the most logical outcome simply because it's the most frustrating. Joseph, you're holding QQQ 400 calls, so you're hanging out with this big shot here. Was this you? 370 grand in premium? Was that you, Joseph? You can tell us. I'm gonna check in and see. What's up? Why not? How are you, sir? Or ma'am? Joseph, that's you. That's amazing. Nice. Let's go. I'm gonna check and see if there's anything interesting on SPY as well. Oh, Joseph, just pretend, man. In my mind, you are. Oh, that's not what I wanted. So now I'm looking for the same thing, but on SPY, 0 DTEs, big unusual options orders. See if anything comes in, or see if anything has come in that's interesting. Oops, I accidentally clicked off the SPY ones. My bad. You have 10 cons. All right. In your public account, but in your private account you have as many as the difference. $365,000 worth. Anything on SPY? Let's see. Not much. Couple $100,000 orders. This one's a pretty big order, even though it's not very much premium. 1,000 contracts for the 467 call. Okay. Let's see. So this person's betting on a pretty large move. $3, $2.50. When did this come in? 9:37 this morning. This person might be out of these by now. Yeah, not much there. This is another bigger one. 19% of the open interest. 2,344 contracts for the 464 put for 200 Gs. I came in at 10:55, so that one's a little bit sooner. Well, still a couple hours ago. This one's a pretty big order. 463 put, $132,000, 1,200 contracts, 50% of the open interest. You know, I don't know. I kind of don't think this is going to work, but I could be wrong. Because it's an index. Yeah, okay. Didn't think so. So what are you guys thinking? There's a bunch of you guys here now. What are y'all thinking? Please say hello. And let me know where you're tuning in from. And let me know what you're trading today. We're going to be together for a little while here. It's 11:30. Well, it's 1:30. We're getting an announcement in about half an hour. What do you guys want to look at? We've got our holiday sale live right now. It's going to be available through Christmas. You could save up to 72%. Up to 72% off on TrendSpider. Pretty insane deal. If you missed our Black Friday extravaganza back in November, this is the next best chance you're going to get. So for the next 30 minutes, I want to spend some time looking at some charts. You know, we can do some analysis on some charts if you guys are interested. We could play around with some tools. What's up, Luzmar? How's it going? Hope you're good. So hit me with some tickers you wanna take a look at. Shyam. Heck yeah. Let's go. Welcome, sir or ma'am. What's up, Justice? Is there a probability based on unusual options activity? A probability? I imagine that if you were to take all of the options, you might be able to establish a probability. What's priced in. Unusual options are a bit different than all options, though. Unusual options are specifically orders that are above 25K. So they're and what we offer is the most up-to-date 250 unusual options contracts, or unusual options orders rather, per ticker. So it's not a full, absolutely full comprehensive view of all options that are exchanging hands. It is unusual options. So it's a little bit different. But unusual options can tell us kind of lots of different things. You know, you can find kind of these. I'm always looking for orders that really are kind of bucking the trend of what appears to be relatively normal. So I'm looking for higher premium. I'm looking for large amounts of open interest. So people that are trading maybe kind of oddball contracts, like 50% of the open interest on this contract. I mean, that's kind of, you know, that's a lot of the size traded within that contract for today. And just in general, these are all 0 DTEs. So, you know, this is kind of giving me an idea of just kind of like how big money is thinking. And sometimes you're not going to glean anything from it. Sometimes you're going to see, you know, you're going to see a bunch of orders that look all about the same. Yesterday we were live, and those orders have left the feed. But yesterday we saw, like, I don't know, maybe it was like 15 in a row, and they were all relatively smaller. They were like $30,000 or $40,000 in premium each, but they were in a row. It was just like this sweep of the same contract, but it was done in such a way so that they could kind of hide what they were doing. The only way you would have seen it is in this list. I can't remember what that contract was. Maybe if anybody was tuned in yesterday, they would remember. The days all just fade together for me, so I don't quite remember. But I remember it was obviously they were buying, they were sweeping above the ask in many of the cases. So if you're sweeping above the ask, a sweep is you're just pulling from any exchange that has it for sale, but then you're also willing to buy it above the ask. That's kind of conviction buying. So we have these labels here that say above ask. That can kind of tell you, like, this person is just really wanting to get into this trade. They don't have an offer that they're waiting for to hit. They are just clamoring to get a hold of those contracts. So in some cases, you know, these are maybe smaller premium sizes, $31,000, $43,000. This one's 10% of the open interest, 270 contracts at 10% of the open interest on the 465 put. That came in at 1235. So I guess what we could do, let's just see something real quick here. So 1235 would be 1035 for me. And this was a bearish sweep above the ask. And since that time, they made a new low. Since that time, like, these contracts, we're trading down. Let me go to SPY here. So who knows? They purchased these between 464.50 and 464.40. We're trading 464.20. So who knows, you know, maybe they were able to grab what, you know, $10 or something a contract on these 550 or so contracts. You know, it adds up, right? So you could see these things come in, and then that could give you a bit of an idea of what to expect. And just the more you look at these in general, the more you're going to be able to kind of pinpoint, like, oh, yeah, that's a really abnormal amount. That's a really abnormal lot that person's buying, or that's like really high conviction, you know, just that sort of additional layer into the analysis. If you're at a big pivotal level and you see, it's just like if you were to be watching the DOM, right? Like the individual buys and sells on either side of the market. I don't know if anybody's ever watched that, or anybody here has ever watched that, but you know, if you get to a really important spot and then you start seeing the DOM acting up, you start seeing lots of action coming into the DOM. It could suggest like that battle for that level. This is a similar type of idea. At least that's how I would utilize it. Let's see. You want to look at CRISPR? Let's take a look at CRISPR. You know me, I like to start zoomed out. So we're giving back currently this month. Looks like we've given back already like half of last month. Yep, broke through the 50. All right. Weakest performing month of the year. Second weakest performing month of the year is December. September is the first. Let's see. I always like to know what are the insiders doing? Is anybody selling? They had a big move last month from 40 to 76, so it almost doubled last month. Doesn't look like anybody's selling. Nothing's really happened since October. We could throw up unusual options and see if there's anything in there. These look pretty slanted towards calls. You'd have to dig into the individual orders to know a little bit more about these calls, but lots of green here. All right, let's drop down to the weekly. Take a look. It's good they didn't lose this big low here. They held that. Turn this guy off. Actually, let's make it just like something more normal. Got rejected the 200 week, pretty much. So what's tricky for me about this, yeah, you can use them as just an additional layer of confirmation justice. Definitely. What's tricky about this, you guys know that I pay a lot of attention to price action, and took out both sides of this previous range, right? You made a new low relative to this pivot. You made a higher high relative to this one. That makes me want to come back to the fibs here. Okay, so it's not plotting where I would personally plot it. That's all right. Still looking at this. So right now you're you know, they broke through the 50, but they're holding it. I think that's your key spot, really, like in here. If they can manage to stay within this 52 to 57 area, then you're probably pretty safe. If they start breaking down below that 0.618, then they might come all the way back. You've got a fair value gap right here. Let me show you. Just adding the fair value gap indicator to my charts. And I'm going to go to the daily. Well, on the daily, there are two of them, but there's one on the weekly, kind of right in here. This area. If it breaks below that 618, you can bet your butt it's probably coming into this. I would imagine it's probably gonna come back into this like 46 area. That's what I would kind of anticipate if I were trading it. Let's look at the daily here. You got the 200-day moving average just there around that 0.618. Now I could probably throw up the fibs. Oh no, it's still not. All right. No problem. So you see what they're trying to do right here. They're trying to hold that 50% retrace. You've got the 200-day. You got the 0.618. You've got a little gap right here too. If they're not able to hold where they're at right now, like this 57 level, I'd be keeping a close eye on 52.5. Because I bet you would get a reaction here, unless some sort of news comes in or something like that, where once news happens, all bets are off, right? Technical analysis works until something unknown comes along, but pending nothing unknown comes along, and this is just a retrace of this move that we saw last month, then I'd be looking at about $52. Just kind of curious where RSI is at right now. Wow, look at this divergence. Crazy. These highs versus these. That is wildly clear. Let's do this too. I'm gonna throw up raindrops. Curious if today becomes a blue Yeah, it's pretty interesting. I mean, to be honest, why not? It's a pretty interesting looking little setup here. They made new highs. They held above new highs, suggesting that they should continue higher on a pullback, wherever that pullback happens to be. Cool. I like this idea. Why not? What else you guys got? Anything else that you're watching? Let's talk about this too. We need to figure out what everybody wants to keep their eyes on when the announcement comes. What tickers you guys want to keep an eye on? Anything in particular? I would imagine the normal stuff. SPY. QQQ. Go ahead and get this thing up and running for us. If you are not familiar, we do offer multi-symbol view. Pepe everywhere, huh? I imagine Tesla. You guys want to be watching Tesla, right? Microsoft is usually one. Do we want to watch any cryptos? Bitcoin, perhaps? ETH? If I'm adding anything that you guys do not care for, just let me know. Can always change it. But I want to make sure we have up what everybody wants to watch. Yeah, Justice, you want to watch Sol? Could do that. Sol has been an unbelievable name these past couple of months. Holy moly. IWM, small caps. Actually, let me, I'm going to put IWM right here. And then I'll put Tesla next to it because I know y'all love your Teslas. We'll go Microsoft here. It moves dollars, not pennies. Yes, it does. It's really insane. What else? What other tickers you guys want to keep an eye on? Man, there are 41 of you guys here? Dang. All right, I've got 41 of y'all here. Let's talk about this real quick. We got 15 minutes until the announcement. In order for me to keep on doing these live streams, I love doing these live streams. And what do we do with them? Normally they're called office hours. This one is FOMC live reaction, but it's essentially an office hours. And what we do at these office hours is we answer questions that you might have about TrendSpider. And it can be anything. It could be how an indicator works. It could be how to script a particular idea that you have for a strategy. It could be how to improve the strategy that you're currently utilizing. And anything in between, how to find particular setups using the scanner, how to utilize whatever. I'm here to answer questions about TrendSpider. I try to do these lives a couple times a week. They're super fun to do. And I want to keep doing them. But to keep on doing them, I have to get views. I need subscribers and I need likes. So if you're enjoying this live stream and you want to see me keep on doing these things, hit me with a subscribe to the channel, hit me with a like. All of that stuff actually does help. I used to think it didn't matter. I know that it matters now. So TLT, we're going to add TLT. What else came in? AMC, GME. All right. Didn't one of them just do a offering? I kind of want to say maybe GME did. If we had to pick AMC or GME, which would you pick? Kant. The notifications button is the key. Yeah, okay, that's what I thought. And I saw people talking about like being frustrated about reducing. They've reduced debt. Burst basket. Burst basket? What is that, Lynn? I can tell you what add ask means, but burst basket? Is that in? Maybe we should do AMC then. All right, we'll go with AMC. Let me know if you guys have other ones. Where are you seeing, Lynn, where are you seeing burst basket? At the ask means that somebody is buying for the cost that the offer was selling for. That's what at the ask means. So if the spread on an options contract is like, to buy it right now at the offer is $1.05, and then the current bid is $1. If I buy at the ask, then I'm paying $1.05. If I'm buying at the bid, then being sold that contract for $1, right? Instead of the seller selling it to me, I'm buying it from the seller for $1.05. The seller is selling it to me for $1. Oracle, KBE. Let's see, what's KBE? Ah, banks. Nice. Okay. We'll throw up Oracle. SPY's up already. Lynn. Big thank you to you guys for adding names here, for making ticker suggestions. If you have other ones, we got 3 more panes that we can utilize here. I'm trying to think what might be good to watch. So Shyam, you said that Sarah Stratsniper sent you. That's awesome. Sarah is a good friend. Have you utilized the plethora of strat-focused tools that are available on the platform? Most notably, perhaps. Let me go to a smaller time frame so you can see it. Just launched this bad boy. Don't know if you've seen this. But notice how the candles, and I'll take off per session BBP real quick. Notice how the candles are colored uniquely here. This is full time frame continuity. This is the full time frame continuity indicator. Have you taken advantage of this yet? Do you have it in your platform? Did you download it? If not, you should. Let me get you a link to it if you didn't. This has been a big request from our strat friends for some time. And there have been numerous ways that you could identify it previously, but this is probably the most efficient way that's available now. So Shyam, if you're still here, hopefully you are. Welcome to the new viewers. Thank you for being here. Shyam, this is a link to a blog post about full time frame continuity indicator. In here, you can download the indicator. There's a link to download the indicator. Super easy. Craig, yes, of course you can. Market scanner. I'll show you the simplest way. Just go to condition, go to chart pattern, daily, type in 1. Oh, oops, not chart pattern, candle pattern. My bad. Candlestick pattern, daily, type in 1, and then choose inside bar. Run that thing. What's up, G-Sal? Hope you're well. Looks like Walgreen Boots Alliance has an inside day. There's your inside. Here's your all of your inside days in the Dow Jones 30. Amazon, or I'm sorry, Amgen, Goldman Sachs, Caterpillar, JPM. So yes, you can absolutely scan for inside days. Easiest way is utilizing the inside bar candlestick pattern, but you could do it with price too. You know, if you have very specifics, like for example, let's say you wanted to say that, like notice how, and I only mention this because different people define inside days different ways. There are a couple, I guess you could define it in 2 ways. You could say that today's high and low is between yesterday's high and low, or you could say today's high and low is between yesterday's open close, just the body of yesterday. So if you wanted to define that the high low today is within yesterday's, the real body. The way that you could do that is you would just say price high, daily high is less than price daily. You could say open one candle ago. Oops. Do this. And then you could say price daily low is greater than price daily close. And you would want to offset these, make these one candle ago. And then this is your current candle. Oh, I've never heard of Burst Basket. But then again, I don't have TradeStation, so I'm not familiar with that, Lynn. I'm sorry. So I'm going to go to a bigger time frame here. So there's your today's high low is within the open close range yesterday. So that's an even tighter inside bar. I don't know if there's necessarily a right or wrong way there, man. Greg. But those are two ways to do it. You can also, on candle patterns, if you go to candle patterns and type in inside, check this out. Go ahead and turn those on. And it automatically identifies them for you. So this identification is the same that we use here in the scanner, in the strat tester. Anytime you would define a candle as being a 1, it's coming from this, essentially like this functionality. Yeah, Burst Basket. Don't know. But at bid, at ask is who's doing, or is somebody paying up for the contract, or are they putting in an offer and their offer is getting taken? That's the difference between those. So we got 7 minutes. Greg, do you understand this now? Do you feel like you got it? Do you need any further explanation? I believe I could also do this another way with GPT conditions. I think I can say the strat is inside. Let's see. Could not. Okay, let's see. Let's try this. If this doesn't work, I'm going to try one other thing. Instead of saying the strat is inside, I'm going to say the strat is 1. Yeah, okay, that didn't work. So let's say the strat is 1. We'll try this. Yeah, there you go. So this is the strat indicator. And what this does is it labels the candles. And you're just saying that it's equal to a constant value of 1. So you can make this a constant value of 2D, 2U, 3, or 1. So a couple of different options for you there, Greg. Full time frame continuity indicator. Let's talk about it real quick. We got about 3 minutes. So full time frame continuity looks for full time frame continuity on up to 4 candles at once. Full time frame continuity being my screen is blurry. That might be a I don't know what I can really do about that on my end. I guess anybody who's viewing, let me know if you see the same. It could just be an internet connection issue. But I just want to just see the one. All right, so full time frame continuity. If a stock is in full time frame continuity, that means that there are multiple time frames all moving in the same direction, either up or down. So if multiple time frames are all green, the 30-minute, the hourly, the 4-hour, the daily, if they're all green, the candles are going to be painted green. If those time frames are all red, the candles are going to be painted red. If some of them are green and some of them are red, the candles are going to be painted gray. Now, a couple things to note here about this indicator. By default, it's set to the 30-minute, the 60-minute, the 4-hour, and then the daily is hard-coded. So the daily cannot be adjusted. You can only adjust these 3 time frames. And this indicator is going to be visible on time frames equal to and below the lowest time frame that you have defined. So in this case, I've got the 30-minute defined here. That's the lowest time frame that I have defined. And so therefore, I can see full time frame continuity colorings on my candles on the 30-minute and lower. If I go up to the hourly, you won't see it. It's only going to work on the 30-minute or below. And the whole idea here is you're trading a small time frame, right? You're trading a 15-minute or a 30-minute, but you want to know what's happening on the daily, what's happening on the hourly, what's happening on the 4-hour. This is your way to see that, even on your smaller time frames. That's the idea. If you want to see it on a higher time frame, adjust that up. So like if I went to 60, 120, 240 and said apply, well, now I can go up to the 60-minute and I'll still see it. Anything above the 60-minute, I won't be able to see it. So that's how that works. We are 3 minutes away here. I'm going to jump over to this screen. Last chance for tickers. Anybody have any other tickers that they want to keep an eye on? I got room for 3 more. Yeah, why not? It is very helpful, honestly. If you are a full time frame continuity, if that's part of your analysis, very helpful indeed. If no other tickers, we can just jump it down to these 12, no problem. The general consensus from the folks that I was listening to and talking to today was it's really all going to be about that. Ooh, I am getting an error. Actually, G-Cell, interesting. I'm getting an error on YouTube. Well, we'll see how this plays out. Yeah, Greg. So right here. Go to this link. I'll take you there too so you can see it. Go to this link and click on this picture or click right here where it says this link. It's going to take you to the full time frame continuity indicator. Click login and import. And then it'll be in your platform. And I can show you guys after this reaction. No problem, Greg. After this reaction, I can show you guys another way to utilize FTFC. It's a little bit different, but it's also helpful. So I'll show you that here in a few minutes once we get this initial move. But what I was going to say is a lot of folks were saying that I was listening to today, they were expecting that the initial move was going to be kind of meh, and it was going to be all about the presser. So we'll have to see how this presser goes. What's up, Eco? How we doing? Hope you're well. Thank you all for tuning in. If you do not, oh, there's the move higher. So presumably they are pausing. They're not raising. TLT cranking. Bitcoin unfazed. Crypto in general unfazed. Pretty powerful little move. Yeah, man. Happy to be here. Justice, let's get you on the platform, man. What are we waiting for? You can get up to 72% off right now. Oh, we're about to go off the screen here on SPY. Sorry. So clearly, markets like the news, at least initially. There we go. Crypto's starting to move now. What's up, Joe Genero? Man, that's that name just flows right off the tongue. Your parents named you well. So obviously, rates unchanged. Now it's going to be all about what Powell has to say. But the market is pleased with this decision, for sure. Look at the banks. Ripping. Sad Oracle over here. Not doing a darn thing. A little laggard. Not participating. It'll probably get your bid eventually. Pretty monster move, y'all. Pretty monster move. Joseph Pierre Genero. Man, sound like... I don't even know what that sounds like. You sound like a leader. Mag 7 streaming along. Yep. As expected. Yeah, I mean, crypto was leading for quite a bit there, for sure. IWM, wow. QQQ taking out yesterday's highs, or was this morning? Okay, today's 13. So just took out today's high. SPY well above today's high. IWM cranking. Yeah, you think so? And then what, Joe? The big question is then what? Do they actually start cutting? Do they raise? Let me ask you guys, how is the stream looking? You think they raise? Ooh, I'm excited for this speech. This is a much more powerful move than kind of the general consensus of what this move might be. Yeah, we don't want to go the way of Venezuela, I don't suppose. Hey, so let me ask you guys, how is the stream? Does the stream look okay? I've got an error here saying it's my stream status is poor, and I don't really know what I can do to fix that, unfortunately. But if it's maintaining okay for you guys, that's all that matters to me. Stream is stellar. Okay, perfect. Thank you, Kant. Raise is definitely tail, unpriced. I would agree with you on that. Raise is definitely unpriced. Is not priced in. That's what you're saying, right? I mean, the market, as far as I understand it, market is pricing in cuts. What's up, Mike? How's it going, man? Hope you're good today. Yeah, see, this is why I keep my finger off the buy and off the sell button today. It's all about them stops. Hunting. Justice, the animation of the little critter in the burning room. This is fine. What do we anticipate from Powell today? You guys anticipating anything? Bit more of the same? Oh, you know what? All right, so looks good running OBS. Yeah, I am. Drop frame rate. Okay, I'll try that. I don't know what my frame rate is right now, but looks like I'm back to excellent stream status here on YouTube, so we're Gucci. I wanted to show you guys real quick another tool that you can utilize for full time frame continuity. If this indicator doesn't quite get you where you're trying to go, we've got another option that you can utilize called the Smart Checklist. This is pretty cool. So I'm going to add it to a new column. And the checklist utilizes scripts the same way. All right, Justice, you gone? Cool, right on. Join us. Join us in TrendSpider Land. We'll be happy to have you. I do these live streams a couple times a week. Feel free to, if you get an account, feel free to sign up, join up one of these live streams anytime you want and ask away. You can also follow me on Twitter. My handle is Krutzky Trades. If you got any questions, hit me up. Happy to answer questions that you might have. So Smart Checklist. Check this out. I've got a pre-made script for this. Actually, let's see. Yeah, we can use this one. And then we can add to it if we wanted to. So this is another way of checking out full time frame continuity. And what this is I have just essentially defined the 60, the day, the week, and the month are green. So the close greater than the open for all 4 of those time frames. And I could add other things in here if I wanted to too. I can add as many time frames as I want, and any time frame where that's true, if it's green, cool, Joe, sounds good. Any time frame where that's true, you're going to see green candles. Any time frame it's not true, you're going to see red candles. Make sure your current candle's toggled on. So like this one right here, you can see it's green on the 60, the daily, the weekly, the monthly. I could add other time frames here if I wanted to. So this is a nice visual check. It's a little bit different from the candles being colored, but it's easy to see, it's easy to read, and it's available too. And you can make it a little bit more streamlined to what specifically you need if you need more than 4 time frames. And maybe you're not interested in the daily, right? Because the daily's hard coded on the full time frame indicator. How's everything looking? So yeah, just wanted y'all to know that that's available. So, Mike, it's actually not an indicator. It's the smart checklist right here. So this is a widget. Now, if you're interested in the indicator, we also have the full time frame continuity indicator. You can grab that in this blog post. The full time frame continuity indicator blog post that we just posted last week. It's on our blog. I'm going to copy that link, send it your way. So this indicator is going to color the candles for you automatically based off of their continuity. It's preset, as I said, it's preset to the, well, I changed it, but it's preset to the 30, the 60, the 4 hour, and the daily by default. And just remember that for this indicator to be viewable on your charts, you do have to be on the lowest time frame that you have defined or lower. So because the lowest time frame that I have defined here is the 30-minute, I can view the indicator on the 30-minute chart or below. Anything above the 30-minute in this case, I will not be able to see this indicator. Crisp, looking nice, huh? I mean, it was certainly at an important spot. Oh yeah, monster little move, huh? Dang, $2 almost. In like 10 minutes. What a move. What do you mean, Joe? One of the 4 trading out of hundreds. Oh, trading channels. Well, I appreciate that. Thank you for saying that. I'm really glad that you find it helpful. That's what we're here to do. We're here to provide some assistance. I understand. I mean, we understand. It's a difficult platform to navigate around. You know, there's a lot going on it. And it's important for us that you guys know how to utilize it. You know, you spend a lot of money on these things, getting access to an account and what have you. You should be able to utilize it to the fullest extent. So that's why we're here. Try and make it so that you guys know where everything is that you might be interested in. Hopefully we show you some new cool things that you had never seen before. So the SPY, certainly a little bit stronger than the Qs, huh? IWM starting to roll a little bit. Tesla's starting to roll a little. But SPY really hanging in there. AMC already gave it all back. Sad. Hope somebody took some profits there. For the folks that are here, is there anybody who is not currently a TrendSpider trader? Gold. Ooh, let's look at GLD. Dang, look at that thing. Yeah, gold is like on the verge, huh? Of a potentially really big breakout. I'm not saying it's going to, but that's a big old flat top there around 190. If they can gain, that could be a really big move. Impressive. Anyway, so I was going to ask, is there anybody here who is not yet a TrendSpider trader? If you are not yet a TrendSpider trader, please introduce yourself and say hello. No judgment. It's all good. You don't have to be... Joe! Bro! What can we do to get you on the platform, man? What do you need? Well, I'm really glad that you watched the channel. That's awesome. What is keeping you from joining up? Is there something on the platform that doesn't exist that you need for your particular style of trading? Or is it that because it's more of a hobby for you, you just don't feel the need to invest in something like a platform? Sony. All right, let's talk, y'all. What brings you here then? If you're not on the platform, what drew you to this channel? How'd you find it? And most importantly, what types of things can we add to the platform that you need in order to get you signed up? We got about 14 minutes until the presser. So I'm going to get it all squared away here. Got it. Okay, cool. I'm with it. No judgment, Joe. You keep on doing what you're doing. I mean, if you don't need a platform to be successful in trading, man, by all means. Will there be any fundamental data in the future? Yes. Jacob, I am very pleased to tell you yes. I cannot give you an exact date on when that's coming, but within the next probably, I think, like month. I'm really stoked about it because that is something that a lot of people have asked for in the past. So I'm really glad that we're going to be able to add it to the platform soon. We're coming for that fundamental data. Eco. You looking for ratio charts? There you go, sir. You could definitely do custom symbol charts. You can utilize up to, I believe it's 7 symbols. Let me do something real quick. And I can find out for sure on that, but I kind of think, here we go. How many symbols is this? I'm almost certain we can do 7 symbols. Let me do this. So here is a blog that we've got about composite symbols. And let me just make sure. This is going to give you everything you need to know as far as like what you can do. Okay, you cannot use more than 9 base symbols within a composite. So here's your limitations. I'm going to Eco just so that you have a link there. What's up, James? How we doing? Hope you're well. Primary selling premium. Nice. And also Eco, you can like strategy test these. It's pretty sweet. What's up, James? How you doing, brother? And the indices are continuing to grind higher. Beautiful. Not the main chart, multiple comparison lines. That is not possible. So you're saying you want to see multiple tickers on the same chart, like the just price action of multiple tickers on the same chart. That is not possible, unfortunately. You can. There is this. What's the name of this indicator? Price compare? Yeah. So price compare. This is an option. This isn't really what you want, but this is an option. So here's the SPY and that that composite chart that we just made. Let me see if I can add multiples of these. I don't think I can. I think I can just use one. But let's see. Oh, no, I can. All right, so there is like this, but this is essentially like multi-symbol view. That's not really what you're looking for. I can't speak to whether or not that functionality is coming, Eco, unfortunately, but I can request it for you. I will do so. I will request it on your behalf. Do that right now. Give me 1 sec. Tracking option symbols. We do not offer, James, unfortunately, we do not offer options charts at this time. Perhaps that will come in the future. I cannot say for sure on that. I would imagine that at some point it might get added along with the trading widget, but I don't know for sure. I just realized the FOMC music is playing in the background. My bad. I agree with you, James. That'd be sweet. So let me show you Eco inside of what's happening now. So let's just do like all unusual options. So what you can do is inside of what's happening now. Now, this is not all options. I want to be clear here. This is unusual options, right? So 250, the most recent 250 most recent orders on any ticker that are above $25,000. But within this unusual options panel here and what's happening now, you can filter in a bunch of ways. So you click on the 3 dots here, and each one of these panels has the 3 dots. They all take you to the same spot. Go to add filter, and then you can choose date, time, the symbol, expiration date, days till expiry, strike price, type, premium, open interest, tags. And you can define all of these things. So Eco, that kind of gets you where you're trying to go. It doesn't get you all the way there, but it gets you a decent part of the way there, perhaps. Is there going to be any updates to the zigzag function to allow more letter labels and potentially weekly zigzag despite there being a lower amount of candles? Jacob, man, you are speaking my language, brother. I hope so. My guess, we are going to be launching a marketplace in the not so distant future, a marketplace for custom indicators. And my personal hope is that somebody will build one for us, and then we can all just subscribe to it, because that would be very sweet. I would love to have that. I'm right with you. Jacob, have you been on the stream before? Are you and specifically, are you familiar with what is possible currently? Got it. Okay. Let's see. James, being able to see a jump in vol. Ooh, that would be sweet. Announcements such as interest rates cause a jump in implied vol. Yeah, that would be awesome. We had we have an affiliate who was requesting gamma levels that we're looking into, see if that's possible. Could TS eventually add the functionality to restart alerts using mobile app? Greg, that's a great question. I'm going to make that request. I've just submitted both of those requests, you guys. Any plans to add level 2 DOM or time and sales data? Great question. I do not know. That would be awesome as well. I would love to say yes to that. I don't have an answer there, unfortunately. We are 2 minutes away. We are 2 minutes away. From our boy Jay Powell. I'm going to go ahead and get him loaded up here. Let me do this real quick. All right. So you guys should be able to see this now. Jacob, I'd be curious. It sounds like perhaps you and I might trade in a similar way. I use zigzag a lot personally, or maybe I don't use zigzag. I don't have it on my charts a lot, but I use the concepts of it a lot. It's definitely something I pay close attention to. But James, yeah, regarding your implied volatility question, that would obviously require all options data, which we don't have. But perhaps that'll come. Because I know people would like it. Yeah, so Eco, I have to say I agree. And to that I say we're working on it. You got to remember, they are a gigantic company with like virtually an unlimited amount of money. And we are, frankly, a small company. Okay, hold on. Here we go. Let me turn off the music. Let's get that off. Let's get this on. Let's crank up the size here. All right. Y'all just let me know once he starts speaking. Y'all let me know if you have any trouble hearing him. He should be nice and loud. We should be good to go. But yeah, so you guys, James in the chat right now, James is on our success team. James heads up our team. So if ever you ask questions in chat, James is one of the guys you might talk to. So he's here fielding y'all's thoughts as well. He's paying attention. Nice, dude. Jacob. That's cool.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Chris Rugaber at Associated Press. I wanted to ask, how should we interpret the addition of the word any before additional firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you.
So specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we were thinking.
Mr. Chairman, the microphone, sorry. Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is really how high to raise the policy rate. And that's really the question that we're still on here. We're very focused on that. As I mentioned, People generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's, when you get to that question, and that's your answer, there's a naturally it begins to be the next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question, and that's what people are thinking about and talking about. And I would just say this. We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. That's really the question that we're on. But of course, the other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
Can you give some color as to the nature of that discussion today? Thank you.
Sure. So it comes up in this way today. Everybody wrote down an SEP forecast, so many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement, like this is what I wrote down, this is what I think, that kind of thing, and a preliminary kind of a discussion like that. Not everybody did that, but many people did. And I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Let's go to Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility
There's
here.
always a probability.
I have always felt, since the beginning, that there was a possibility because of the unusual situation that the economy could cool off in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
I'm curious if you're looking back on the past year, you talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus or a little more than that growth year at a time when potential growth this year might even have been higher than that just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but in a very different setting. And I would say the labor market, because of the stronger growth, has also been significantly better. If you look back at the SEP from a year ago, there was a significant increase in unemployment. That didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one that's coming back into balance with support from the supply side, a greater supply of labor. It's that's what we see, and that I think that combination was not anticipated broadly.
Howard.
Thanks, Howard Schneider with Reuters, and thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates next year. Whether it's a coincidence, for example, that the spread between PCE inflation, core inflation, and the federal funds rate stays constant over the year. Are you simply calibrating against the fall in prices, in the price level that you're expecting, in the rate of inflation that you're expecting, as opposed to supporting the economy?
Nothing quite that mechanical is happening. The SEP really is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy, and I think if you look at the big difference from September in the SEP, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down basically each individual writes down a forecast and a rate forecast that goes with that forecast. We tabulate them and publish it. And so it isn't, you ask about real rates, I take it, that is something that we're very conscious of and aware of and monitor, and it's certainly a big part of, it's a part of how we think about things, but really it's broader financial conditions that matter, and as you well know, it's so hard to know exactly, what the real rate is or exactly how tight policy is at any given time. So you couldn't follow that like it was a rule and think that you would get the right answer all the time. But it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
It sounds like the discussion over that, if I could follow up, has already kind of begun. I'm wondering, just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over, that assessment really over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward, but that's another assessment that we're going to make very carefully. So as time goes forward.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've argued over the last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level, with cuts beginning around March. Is this something that you are broadly comfortable with?
So this last year has been remarkable for the sort of seesaw thing back and forth we've had over the course of the year of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how we need to use our tools to achieve our goals. And that's what we really focus on. And people are going to have different forecasts about the economy, and those are going to show up in market conditions, or they won't, but in any case, we have to do what we think is right. And, in the long run, it's important that financial conditions become aligned or are aligned with what we're trying to accomplish. And in the long run, they will be, of course, because we will do what it takes to get to our goals. And ultimately, that will mean that financial conditions will come along. But in the meantime, there can be back and forth, and I'm just focused on what's the right thing for us to do, and my colleagues are focused on that too.
The markets seem to think inflation is coming down credibly. Do you believe we're at the point where inflation is coming down credibly?
Listen, I welcome the progress. I think it's really good to see the progress that we're making. I think if you look at the 12-month measure, look at the 6-month measures, you see very low numbers. If you look at 12-month measures, you're still well above 2%. You're actually above 3% on core through November at PCE. That isn't to say I'm not calling into question the progress. It's great. We just need to see more. We need to see continued further progress toward getting back to 2%. That's what we need to see. So it's our job to restore price stability, and that it's one of our two jobs along with maximum employment, and they're equal. So we're very focused on doing that. As I mentioned, we're moving carefully at this point. We're pleased with the progress, but we see the need for further progress. And I think it's fair to say there is a lot of uncertainty about going forward. We've seen the economy move in surprising directions, so we're just going to need to see more further progress.
Gina.
Gina Smilik, New York Times. Thanks for taking our questions. In the SEP from today, growth is notably below potential in 2024. If growth were to surprise us again in the way that it has for years now by being stronger than expected next year, would it still be possible to cut rates? Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is inflation, so is labor market data. So we'd look at the total, if we make decisions about policy changes going forward, we're going to look at all those things, and particularly as they affect the outlook. It's ultimately all about the outlook and the balance of risks as well. So that's what we'd be looking for. If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%. But if we see stronger growth, we will set policy according to what we actually see, and so that's how I would answer.
I guess the question I'm asking, if you don't mind a quick follow-up, I guess the question I'm asking is above trend growth itself a problem?
It's only a problem it's not itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust, what that will mean is probably will keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean ultimately that we would need to hike again. It just is. It's the way our policy works.
Go to Neil.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
So on the better balance side, just a lot of things. It's you see job growth still strong, but moving back down to more sustainable levels given population growth and labor force participation. The things that are not quite, but let me go on with that list. Claims are low. If you look at surveys of businesses, they're sort of the era of this frantic labor shortage are behind us, and they're seeing a shortage of labor is being significantly alleviated. If you look at shortages of workers, whereas they thought job availability was the highest it had ever been or close to it, that's now down to more normal levels by so many measures: participation, unemployment, so many measures, the unemployment, job openings, quits, all of those things. So wages are still running a bit above what would be consistent with 2% inflation over a long period of time. They've been gradually cooling off, but if wages are running around 4%, that's still a bit above, I would say. And I guess there are just a couple of other, the unemployment rate is very, very low. And these are, but I would just say overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases.
Claire?
Claire Jones, Financial Times. I'd say the mood among economists at the moment seems to be one of cautious optimism, which is somewhat corroborated by your forecast, by this sense that we are going to have a soft landing. Yeah, when we hear from the general public, there's a lot of discord about economic conditions. What do you think explains this disconnect, and does it matter for policymakers?
It may be. A common theme is that while inflation is coming down, and that's very good news, the price level is not coming down. Prices of some goods and services are coming down, but overall, in the aggregate, the price level is not good. So people are still living with high prices, and that is something that people don't like. And what will happen with that is wages are now, real wages are now positive, so that wages are now moving up more than inflation as inflation comes down. And so that might help improve the mood of people. But we see those public opinion surveys. The thing that we can do is to do our jobs, which is to use our tools to foster price stability, which has such great benefits over such long periods of time, and which is the thing that really enables us to work for and achieve an extended period of high employment, which is so beneficial for families and companies around the country.
Victoria?
Hi, Victoria Guido with Politico. I wanted to ask, on the flip side of if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job demand-wise?
Sorry, if
the economy looks like it's starting to fall into recession, if the jobless rate starts to rise?
That's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is the labor market coming into better balance without a significant increase in unemployment, inflation coming down without a significant increase in unemployment, and growth moderating without a significant increase in unemployment. That's what we're trying very much to achieve, and not something we're looking to see.
But would you take that as a signal that you should cut rates?
Obviously, what we'll do is we'll look at the totality of the data, as I've mentioned a couple of times, and certainly the labor data would be important in that. And if you can describe a situation like that where if there were the beginning of a recession or something like that, then yes, that would certainly weigh heavily in that decision.
Michael McKee from Bloomberg Television and Radio. Mr. Chairman, you were, by your own admission, behind the curve in starting to raise rates to fight inflation. And you said earlier, again, the full effects of our tightening cycle have not yet been felt. How will you decide when to cut rates, and how will you ensure you're not behind the curve there?
So we're aware of the risk that we would hang on too long. We know that that's a risk, and we're very focused on not making that mistake. And we do regard the two, we've come back into a better balance between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability mandate, and we're getting back to the point where, which is what you do when you're very far from one of the two mandates. You're getting now back to the point where both mandates are important, and they're more in balance too. So I think we'll be very much keeping that in mind as we make policy going forward. And the things we'll be looking at, I've already described. You know, we're obviously looking hard at what's happening with demand, and what we see the same thing other people see, which is a strong economy, which really put up quite a performance in 2023. We see good evidence and good reason to believe that growth will come in lower next year. And you see what the forecasts are. I think the median growth, median participant wrote down 1.4% growth, but we'll have to see. It's very hard to predict. We'll also be looking to see progress on inflation and the labor market remaining strong, but ideally without seeing the kind of large increase in unemployment that happens sometimes.
When you begin the cutting cycle, will it be essentially run the same way you do it now with raising rates, where you basically do trial and error cut and see what happens, or will you tie it to some particular measure of progress?
We haven't typically tried to articulate, with one exception, a really specific target levels, which was, some of you will remember the thresholds that we used in, I guess, 2013. The answer is, these are things that we haven't, really worked out yet. We're sort of just at the beginning of that discussion.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So if the Fed cuts rates, as the dot plot is showing, about 75 basis points, does that signal that there's a belief of weakness next year in the economy?
It wouldn't, if that were, first of all, let me just say, that isn't a plan. That's just accumulating what people wrote down. So that's not something, this, but allow me to say it again. We don't debate or discuss what the right, whose SEP is right. We just say what they are, and we tabulate them and publish them. So it's important for people to know that. But it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and it doesn't need the tight policy. It depends on, the economy can evolve in many different ways, right? So, but it could be more what I just described.
And you focused on core inflation. We've heard in other meetings. How sticky is core inflation right now?
Well, that's what we're finding out, and we've seen real progress in core inflation. It has been sticky, and famously, the service sector is thought to be stickier. But we've actually seen reasonable progress in non-housing services, which was the area where you would expect to see less progress. We are seeing some progress there, though. In fact, all three of the categories of core are now contributing. Goods, housing services, non-housing services, they're all contributing at different levels, meeting by meeting, or rather report by report. So, yeah.
Okay, let's go to Katerina.
Katerina Saraiva, Bloomberg News. Thanks for taking our questions. I just wanted to ask a little bit about, we had some pretty positive data this morning and yesterday. I'm assuming those were not incorporated into the forecasts we see today. But I just wanted to ask, how that kind of adds to your thinking, on the inflation outlook.
Right. So we got CPI the morning of the first day, and we got PPI the next day, which informs the translation into PCE. So it's very, very late in the game, but nonetheless, participants are allowed to, encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that and create the documents that you see. So until about mid-morning, a little maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
Okay, and do you see, how are you, when you think about, starting to think about the rate cuts next year or whenever they come, how do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant structural shifts, and is that going to change how you look at a rate cut path?
The question of whether there have been fundamental structural shifts is really hard to know the answer, and a very interesting one right now. The one that would affect, one that comes to mind, though, is just the question of where the neutral rate of interest is. And so, for example, if it's risen, and I'm not saying that it has, but if it were to have risen, that would mean that interest rates would need to be a little bit higher to convey the same level of restriction. The thing is, we're not really going to know that. You know, people will be writing papers about that 10 years from now and still fighting about it. So it's just that it's going to be uncertain. So we're going to be making policy in this, difficult, uncertain, really unprecedented environment. Someone once said that you know the natural rate of interest by its works, and that's really right. But that's very difficult because policy operates with a lag. So it's one of the reasons why we slowed down this year. We started slowing down at this meeting last year, reducing the pace at which we were adding restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that the shift back into services has not been complete, and it doesn't look like it's ongoing, but I don't know if that's right. Maybe people just bought so much stuff that they temporarily don't want any more stuff. They haven't got any place to put it.
Let's go to Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned, PCE inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are, of course, stickier. So in looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
I mean, the reason you wouldn't wait to get to 2% to cut rates is that policy would be too late. I mean, you'd want to be reducing restriction on the economy well before 2%, because before you get to 2%, so you don't overshoot. If we think of restrictive policy as weighing on economic activity, it takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and I think you'll see a reasonable estimate of the time lags and things like that it would take.
Do you think below 3% would be reasonable?
I wouldn't want to identify any one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
Hi, Chair Powell, Jean Young with Market News. Wanted to go back to the stickiness of inflation question. Over the past couple of years, a lot of central bankers have talked about the more difficult last mile of getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year. I'm curious, do you think something has changed in our understanding of inflation, or do you subscribe to this notion still, or is it something different about the U.S. economy? Thank you.
I think this, we felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions of supply and demand. And the second thing would be our policy, which was weighing on aggregate demand and actually making it easier for the supply side to recover because of lower demand. We thought those two things were going to be necessary. Sorry, say the last part of your question again.
If there was something different about the U.S. economy.
Yeah, so it's not that, it may or may not be about the U.S. economy being different. I think that this inflation was not the classic demand overload, pot boiling over kind of inflation that we think about. It was a combination of very strong demand, without question, and unusual supply side restrictions, both on the goods side but also on the labor side, because we had a participation shock. So this is just very unusual. And, we had the view, my colleagues and I broadly had the view that we could get a lot of, you had essentially a vertical supply curve, because you ran into the limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand reduced, and something like that has happened. It happened so far. The question is, once that part of it runs out, and we think it has a ways to run. We definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you will run out of supply side help, and then it goes down to demand, and it gets harder. That's very possible. But to say with certainty that the last mile is going to be different, I'd be reluctant to suggest that we have any certainty around that. We just don't know. I mean, inflation keeps coming down, the labor market keeps getting back into balance, and it's so far so good. Although we kind of assume that it will get harder from here, but so far it hasn't.
Okay, we'll go to Megan for the last question.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
We're not talking about altering the pace of QT right now, just to get that out of the way. So balance sheet seems to be working pretty much as expected. What we've been seeing is, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up. The reverse repo facility has been coming down quickly, and reserves have been either moving up or, as a result, or holding steady. At a certain point, there won't be any more to come out of, or there'll be a level where the reverse repo facility levels out, and at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion. We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected, we think.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
So I think they're on independent tracks. So you're asking, though, the question, I guess you're implying the question of can you continue with QT at such time, QT, which is a tightening action, at such time as policy is still tight? And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time.
Thank you.
Thanks very much.
Well, all right, y'all. That is it for me here today. We've heard everything that we needed to hear from Powell. I would love to discuss it with you guys. I'd love to talk more about it, but I really do have to get out of here. So I'm going to give a big thank you to everybody who tuned in. Appreciate you being here. Remember, again, our holiday sale is live, up to 72% off until Christmas. So take advantage of this offer if you're interested in it. I will be back again live tomorrow. Or no, not tomorrow. I'm sorry. Friday. Yeah, Friday. I'll be live. Friday morning, answering any questions you guys might have about the platform. So hit me if you want. Thanks again, y'all, for being here. And we'll see you guys soon. All right. Take care.